Mihir Vora joins us now. Let's take our conversation forward. Mihir, it's pointless to discuss markets when you're so close to election cycle.
I mean, but there's no choice. We have to, right?
Why is that we have seen a very divided positioning? FI shorts in the Nifty or FI hedges at an all-time high, 10-year high, DI and FI at an all-time high. So why is there such a contrasting approach?
See, I think FIs are taking a global call, and from what I understand, talking to some of the global investment banks and brokers, is that there seems to be some kind of outflow from global emerging market funds, probably going back into the US or risk off or whatever you call it. It can't be risk off because US markets are doing so well, so maybe the US market itself is acting as a magnet for global flows. So it seems to be more of a gem global emerging market outflow, out of which India is typically 10%. So when money flows out of global funds, you do get redemptions in India, and some of the positioning may be because of that. Some FIs, of course, will be buying protection before the elections. Maybe some of them also have event hedging strategies or event hedging policies, so to say, for which they might be buying some protection. But I don't see a sustained outflow or a panicky outflow from India. And of course, the local sentiment, as you rightly mentioned, continues to be very strong.
If markets like the election verdict, then what kind of reaction we are in for?
My guess is we'll be back to business as usual. As of now, I don't think the market is positioned for any change. So if there is continuity in the policy, continuity in the regime, then will be business as usual. Maybe a little bit upside, because as we discussed, there are shorts in the market, especially the FIIs. They might do some short covering, and then after that initial pop, we might be back to business as usual. The focus probably will be on how fast do we execute the current policy regime, which is anyway positive for investments.
So the leadership in the market, if there is continuity, you think it will continue, whether it is defense, railways, Capex,
I should
that
think
will
so.
continue?
I should think so, yes. Because consumption is still taking a little bit of time to come up. Hopefully after the monsoons, the worst will be over and we will see even the lower end consumption coming up. But as of now, it continues to be a K, with the sectors that you rightly mentioned continuing to be the outperformers.
So in a very tactical positioning, Mihir, would you say do nothing right now, post June 4th, do more of the same, which is buy the same names that you talked about?
Absolutely, yes.
Yeah. But what gives you conviction that, the entire Capex theme is here to stay, defense, manufacturing, their entire play? And I ask because the stocks have run up a lot, right? While yes, earnings are backing that as well. But we all know the kind of valuations that they're quoting on. You think this kind of parabolic move is going to continue, or these sectors will consolidate for a bit?
Well, I'll be happier if they consolidate because I got money to invest also. So the point is that, if we step back and see 2 or 3 big objectives that we need to accomplish, and which is obviously what the government has been talking about, is job creation, right? And longer term GDP growth rate, and we need to go to a developed market status in the next 20-30 years. That will just not happen unless we create physical assets.
Sure.
Unless we do investments, Capex, infrastructure and real estate, we will not grow at more than 5.5%. That's my call. Consumption alone can maybe give us 5% growth, but not beyond that. So if we want to go to the trajectory which will take us to the developed market status by 20-30 years, it has to be with 7 to 8% GDP growth rate, and it has to be based on physical asset creation. So I think job creation, physical asset creation all go hand in hand, especially with the threat from AI in the services segment. We just can't depend only on IT services to drive exports. We have to have physical exports also.
And you've spoken about the 7 drivers for the next 2 decades. I see 2 phones and iPads, so I want to ask a little bit more about
You have 2
digitization.
phones and an iPad. And a watch also.
And a watch also.
So clearly digitization, this whole theme is clearly big, and I want to talk about the China +1 diversification factor as well.
Certainly. So, the big picture again, as I said, we need to create jobs, and good thing is that the Chinese population, the working age population has already peaked out. Europe is already peaked out. Japan is peaked out. US will not add net workers. So India is the only big country which is going to add workers. And if we create a right environment, which I think we are, in terms of encouraging investments through PLI, etc., that should happen. And the scales are massive. China is 80-90% of the world's production in so many commodities, so many goods, so to say. So even if 10% of China were to come to India, or 20% of China, we are talking about a massive scale up for the next 5 to 10 years.
Mihir, so the cash which you've collected, in the NFO? How much of
And
that is invested?
congratulations for that, by the way.
Thank you.
Sizable sum.
How much have you invested?
I mean, we collected from 16,000 investors. I think that's
Yeah.
something that we are very proud of. We are more than 75% invested at this point in time, because as during the NFO roadshows also we had mentioned that we'll not take a big call on asset allocation. We more of sector and stock picking approach, and we are sticking to that. And as I said, there is an event risk. It could work both ways, which is the election, and we are not really in the game of asset allocation. So we're pretty much investing as and when we.
Yeah, there's one data I want to share with our viewers, and we're showing this data, I think, on last Friday when we did the election, shows that the SIP flows in 2014, they were 2,000 crores a month. Now they stand at 20,000 crores. You look at that data and you say, wow, this is the India which you want to say is now really, really looking at, it's really rising. I mean, it's such a proud moment. You look back and you get goosebumps. And I remember late Rakesh Juniwala used to say a tsunami of flows would come to India. And I mean, I wish he was here to see this kind of a day. But that data is absolutely breathtaking. The number in 2014 was 1,200 crore. I was optimistic when I said 2,000 crore. It moved to 8,000 crore. It has moved to 20,000 crore now. Can it go to 30, 35 in 5 years?
It could.
It could. It has potential, or now we've saturated?
No, it's absolutely a function of demographics. As we discussed during the NFO, and one of the big themes is demographics and the change in the income levels. The fact that the highest income categories percentage growth will be the highest. So that has massive implication on financial savings, financialization of savings, and it has massive implications for premium item consumption also. So I think what we are seeing in terms of SIP flows is part of this big trend where there is going to be larger and larger pool of financial savings which will flow into various asset classes, including mutual funds.
Is there merit in going contra in the market? You alluded to a K-shaped recovery, premiumization. One is not supremely confident of rural growth actually coming back. Yes, a few odd Dabur here and there may see that in their numbers. Or would you say just stick by, follow the trend, invest in the rural recovery when there are actually numbers to prove that?
So, we like to take a longer term call. And even within the rural space, there are segments which probably have a longer runway. For example, tractors. The penetration and the use of tractors and other equipment is going to grow.
Yeah.
So while FMCG, which is a low ticket item, and toothpaste, etc., which are high penetrated categories, may not grow that fast. But within the rural space also, there will be shift in consumption, the shift in demand. So we would like to go into those spaces where the visibility and the runway is longer. So there are segments within the rural space also which we can pick and choose.
Any other contra bets?
As I mentioned, say tractor can be one bet, farm equipment, for example, that's another bet. Financing, gold financing. I think there is a long way to go. Of course, the gold financing companies have reached the tier 1, tier 2, tier 3 cities, but there is enough wealth out there in the rural segments also. So that can continue to grow for a while. So there are many sub segments which I think are possible. With more and more electricity availability, you can see lower end electric goods pick up.
Yeah.
So those kind of trends we can play even in the rural theme.
You spoke about the fact that there will be a little bit of consolidation within the defense space. Any other sectors that you think have probably run up too ferociously or valuations mismatch and therefore are now in for a cool-off period?
I'm a bit wary of some of the stocks where the floating stock is low. And they're in the private space, they're the public PSU space. Because there are many stocks where the government is only 80-90%, so very little floating stock on a lower market cap. There we are seeing, when the markets are turning, we see a lot of froth, a lot of frenzy. I'd be, a bit skeptical about those, and I would continue to be skeptical about the management quality. So I think even if it's a roaring bull run, I don't think we should go down the quality curve as far as managements are concerned. So I think quality and low float stocks are something that I would keep a tab on.
Okay, so I'll make an assumption here that the current government comes back. The attention then would shift to the cabinet formation, then it would shift to the 100-day agenda. And markets, they always like to hunt for something different. So immediately from that 100-day perspective, where do you think the narrative could be? I mean, what is the new one thing which you think markets are expecting from the current government to come back and do in a new avatar? Modi 3.0.
I think it will be more of the same. And of course, after that, you'll also start looking towards the budget, but which I think is going to be a non-event in any case. Not much.
Budget is also no event, election is also no event. The event क्या है फिर?
India is the event. India is the event. India is the event.
Yeah, you never know.
Yeah.
So I think the growth story continues, and India is one pocket apart from the US, which is growing very well in the world. So I think we should just enjoy it and ride it.
Okay. What is apart from pockets of extreme overvaluation here and there, what else is the risk to the market?
Risk is if the K-shape continues. You can't have 70% of the population not contributing to GDP growth. So I think, since we are on the topic, one of the agenda items could be, higher agri productivity. Because there is a huge scope for agri exports, but that can't happen without productivity. So there might be something on the rural side, for example, in the first 100 days, which can lead to longer term agri productivity. So those kind of initiatives we can see going forward. But as I said, unless the rest of the economy also starts contributing, and the private sector capex, which is showing some signs of pickup, that acceleration has to happen. So while we are optimistic, we need to see more action on the ground from the private sector.
Well, incidentally, we are also having this series, Masterclass with Utpal Seth, and the first episode's gone on air. Got good feedback for that. He taught us a concept, terminal value. Look at where stocks can really reach. Where do you see that magic happening, where it looks expensive right now, but doesn't matter, the growth is so strong that 3, 5, 10 years, you are surely going to compound your wealth? What is that one idea or some ideas or themes where you think 3, 5, 10 years are looking good?
Sure. So, some of the pockets of manufacturing, I would say, have a long runway.
Pockets of manufacturing. So you see manufacturing like a 5-10 year trade.
Absolutely. Okay. Because we are just $500 billion manufacturing economy per year.
But what within manufacturing? Manufacturing is a very big pool.
No, anything to do with labor, anything to do with physical assets. We are so horribly underinvested that even if you do a little bit, it's a lot. So to say, put things in perspective. China is like 10 times us. US with population which is 1/5 of ours is 5 times bigger than us in terms of manufacturing. So there is a long way to go. And some of the pockets like defense. Every time we come back to defense and why we are so bullish is that defense manufacturing is something that we haven't even scratched the surface because the private sector was not allowed in India. And we have seen time and again, whenever we have started allowing the private sector to come in, we have gained market leadership, global leadership. IT services, we are global leaders. Auto components, we had auto components, we started in the 80s and now we are significantly contributing to the global. Even pharmaceuticals, we are leaders in pharmaceuticals when the private sector came in the 80s. So wherever the private sector is given a free hand without interference, we have become globally competitive on our own. So defense is something we just started 3 years ago, 5 years ago, where the private sector was opened up. So the runway can be huge. Our total defense manufacturing is less than $15 billion today. The world market is $2.2 trillion. So that runway can be huge. So there are some pockets like that. Premium consumption. If the population demographics works the way it is, for the next 20 years, you'll have some items which will continue to grow faster.
Which are those items? Cars, I can think of car air conditioners.
Cars,
mobile
air conditioners,
phones.
hotels, mobile phones, jewelry. We talked about that big gorilla, but that gorilla can continue to be a gorilla, and even that in that segment itself, some more gorillas can come. So there are these mega trends which can last for years and years.
Absolutely. Since you did talk about a mega trend, defense, Mihir, thanks so much for taking the time out and joining.
If you like this video, then like, share and subscribe to ET Now.